Now, I just want to shout out Meta, Amazon, the GOATs, because they absolutely took the Nasdaq 100 and the S&P 500 to levels that we didn't really know were possible. We're getting major breakout points, and this Sunday there's crucial news that you need to be paying attention to, and you will be able to watch live on your TV. And I'm not talking about a crazy Trump speech or a loopy Joe Biden speech. I'm talking cold hard facts about our economy. But I'm telling you, this current week, there's a few indicators that are a little bit scary. However, the upside potential based on growth alone has me extremely interested in a few setups, and that's what we're going to talk about today. Let's not waste any time. Let's get to work. Now, number one, before we get into the charts, I want to say right now, the newsletter is down below. Also, if you sign up for the newsletter, you're like, hey, I don't get it, and you email us, check your spam folder. I know it's very difficult to do, to search option drops in your, it's very difficult to search that in your inbox. But anyways, you're going to get all this information. What did we say this week? Leading to a close just below 17,595. We need to see us hold these key levels to break back into those highs like we mentioned there. Again, it was all there for you. It was all there. Russell, everything. Tesla going back down to lows. We talked about that. NVIDIA exploding to highs, right? It was all there, all free game, absolutely free. The link is down below. Make sure you tap in. Now, when we look at what's happening here, let's talk about this. So few levels we marked out, last night into today. So what did we do? We marked out the demand that we had here. We had a previous high here as well. Now, if you're familiar, if you're tapped in, you had all this information for yourself. So we came back in. We tapped it this morning when non-farm payrolls came out a little bit negative. They came out positive, higher than expected, but, pricing in less of a rate cut to come, right? And then he spiked up back into basically our previous highs that we had established here on Nasdaq from Wednesday. Okay, and that's kind of where we're at right now. You can see the VPVR playing out there where the most volume is sitting, and it's really right about that 17.6 range where a bulk of that is sitting. Okay, now you go over to ES, we get a better visual here. ES, congratulations. Now I'm not talking about Post Malone. You're absolutely ripping new highs on the year. If you go out to the weekly, you have to go back to 2021. Again, you zoom out. This is our all-time high here around 50.32. But again, really nice on the 2 hour to see us breaking and mounting previous highs as well. Exactly what we wanted to see. Now, again, you had a little bit of a dip from the non-farm payrolls. You mounted, you pushed back up. Again, ES is an absolute monster here. You're looking very, very good. You haven't even had a retest, to be honest, completely of the 49.60 level. You did on a smaller time frame. You can see how you broke, retested, and pushed back up. So I would be kind of looking for that early on a Monday morning potentially, but what they push back to the upside most likely. We go into a few other things like DXY. I look at DXY. This is maybe the only area that is concerning, and you're going to see a lot of comments on this, okay? So the 200 SMA, you're breaking back above it. We talked about those rejections that we had yesterday, and then we dropped more overnight, and then we bounced back once non-farm payrolls came out. Also, with those yields down here, spiking back up, back to the key level of around 4.2, underneath the 200 SMA right now. But I do want to talk about something before we go too far into anything, right? And this is very important before we get into equities and stocks we're liking, right? You have to highlight, back in July through October, you bounced up and then you tanked back down, right? You bounced up here and then you tanked back down. So things to think about, like this isn't like, people like to jump to the gun, jump to conclusions, like to imagine X, Y, and Z things playing out, right? But again, it's important that we, like I always say, we are reactive, not predictive. We don't want to predict anything. We want to react to what we're getting. What I will say, someone did comment about this, a potential inverse head and shoulders may be playing out here, right? I do see it. I would be watching it. Worth mentioning, the neckline is a little jacked up, but still, I do see it potentially. It could happen. So I am watching. I'm paying very, very close attention. It's also worth mentioning Jerome Powell will be on 60 Minutes this Sunday, so make sure you check that out. However, I don't see it being anything surprising, right? I don't think he's going to say something in FOMC that he hasn't said in a FOM, into a 60 Minutes conference. That makes no sense. If anything, I think 60 Minutes will be bullish instead of bearish, and he'll say it to reassure and get confidence from, the people, right? You and me, dare I say. So that's the big bullet points that we're looking at there. IWM is basically just tracking down lower right now, making lower highs. You need to break above 200 to get bullish, but that's where we're at currently. So as we look at the market again, we're going to go over equities, but when you look at ES, you look at Nasdaq, you had non-farm payrolls come out, right? Kind of hurt the market and you bounce back up. Again, we need to understand a few things before you start. And people are gonna have crazy comments today. I'm probably not gonna read too many of them. I'll read them all. I'll read them all every day. But look, when you're looking at the market, it's really important that if you're trying to base it off of fundamentals, that you listen to what Jerome Powell says. What has he said? The labor market has been resilient. You could have a strong labor market now and get a soft landing. Growth has been consistent. It's been growing. He thinks it'll eventually slow down, but right now, guess what? It's helped lead to a soft landing, help regulate inflation, and help the economy not crash while it's doing it, right? Everything that Powell has said that he wants continues to happen, right? Now, eventually, the market will contract and slow down on growth. But right now, it's literally just going. I mean, if you look at earnings, that's the best way to look. Don't look at, people want to look at, they say, the point of consumers and this and that. Earnings give you the answer. Amazon's showing that consumers are strong. Meta, based on data, based on what they're doing with advertisements, still looking good. Businesses are still using the platform, still paying for those ads, right? Something is working. We look at what's happening with AI. Is it the bubble, right? Let's pretend that it's the bubble. Maybe it is the bubble. But when we look at the earnings, the companies still are beating 10, 15% over and over and over and over. This is crazy. So maybe we should take a step back, look at the chart and just say, I've been trying to short for a year now. It's not working. Maybe I should not short the market going straight up. Congratulations. I played myself. Now, looking at the market, again, I say this a lot. You always want to be reactive and not trying to predict what's happening. What does that mean? Am I trading going into earnings? Usually, no, I'm not. But what do we know? After earnings happen, is usually one of the best times to attack the market, right? Because you understand how those earnings performed and what's happening within those sectors and the market as a whole, right? So would I want to trade NVIDIA before the earnings, right before? Probably not, because you're pretty unsure with what they're reporting. But if NVIDIA reports well, then I know after earnings that guess what? Semiconductors are probably going to run based on the numbers that they're doing. We cannot deny simple numbers that are coming out there. If they're beating by 20%, well then guess what? They're probably moving very strong, especially if they're providing the guidance on top of that. I know what I'm saying sounds elementary, but sometimes you have to break it down to that elementary level before you can start even trying to make money on it. So again, this idea that there has to be this massive collapse, maybe it happens. But again, just like we have played this to the upside, we've been pretty risk tolerant right here, right? We've been really aware of the risk the whole time. And we've been just playing the retest. We haven't been longing the top. We've been playing the pullbacks every single time. So again, that's just all I'm saying. Be reactive. Don't try to predict. And I promise you the results will, tell the story for itself. And stop being so biased, please. Before we go into those equities, I do want to talk a little bit about SPY and Q. So SPY, what did we say yesterday? Well, it was simple. If you paid close attention, all you had to do was watch yesterday's video. What did you want to see? You want to see a break of those highs, 491.6. You broke, you retested. You can actually see that you based at that level, creating, guess what? I mean, it's a small one, but you can't deny it. Again, you're basing at that level. Go to the 15-minute, still basing there, right? Beautiful. Exactly what you wanted to see. So again, you can see you base at this level, creating a little tiny demand, but still demand nonetheless, and push up. Once again, beautiful, 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 and you push back into highs. If you just did that, you just traded the amount of this level, and you traded once you broke over those highs, you would have traded from 492.5 all the way into 496. That's just doing that, not going long at lows, not doing anything risky throughout the day. That's all you would have done. Now, if you, bought at support where we mentioned, the level down here, again, it can go over and over these levels, but still, whatever you want to do, that's what I'm just saying, again, it just continues to play out exactly like we like. So what you get, put in some work, you might actually get some results. Now, QQQ, our level was 42. Oh my gosh, 428.3. Oh my God, got me stuttering over here. Now this one was a little bit tougher. I will say, we look what happened. You get the little bit. It didn't happen until around noon. You got above and then you remounted here and then you pushed up. A little bit of a less Not as good of a move, but we've been saying ES has been leading the pack. Okay. So again, that's what's happening there. Now, before we go into those equities, let's talk about a few things. Equity train. I just want to say a few things really, really short, sweet. I want to play the strong names. Okay. So again, please listen, please. When I'm looking at the market, if I'm going long, I want to trade names that are inherently strong. I do not want to trade names that are weak. Tesla, great example. I don't want to trade Tesla to the long side yet. We are holding below 194. We're below the 200 SMA. You're below every support. Why would I want to go long on that name? I'm just saying. Now, I look at names like Microsoft, great earnings. Maybe I want to go long on that name. I look at AMD, holding all its supports. You know, NVIDIA is breaking out. Maybe I want to trade that name. I look at NVIDIA, mounting previous highs. Maybe I want to trade that name. Focus on strong names when you're trading to the upside, and when you're going to the downside, stop trying to short names that are at all-time highs. Short the names that are already giving you weakness. Which one do you think is more likely to give you a better chance of success? I'm not saying 100%, but I'm saying success within your trade, right? Too many times we're focused on 80, 100, 200% trades. Those are cool. Everyone posts them on Twitter, but no one's showing you their account, right? No one's showing you live. No one's going and doing recaps, right? No one's calling it out before it happens, right? It's not happening, right? These are just make-believe accounts on social media that glorify risk-taking, and it's really just gambling, right? I understand, and I try to push this as much as possible, that you guys have families. You have jobs. Your money might be valuable to you. If it isn't, then maybe this, I don't think this is a channel for you if that's the case. Just go gamble somewhere else. But I try to respect you guys with that sense of it. So please, just listen a little bit, please. Okay, number one, we're going to look at Microsoft. Microsoft, probably my favorite name out here right now. We talked about this yesterday. You mount 408, you're pushing into highs. I mean, I thought, honestly, you could get a pushback in all-time highs. You did get close. You get to 412.6 from 408 once you mounted, and you made this little pennant there as well. Look how tough that was. You can actually see how that kind of played out there. Really nice, as you see there. So anyways, really nice pennant. You broke out to the upside. Really nice. You pushed into like 412.5. Still like it. Looks good. AMD. I traded like a little scalp today on AMD. I got stopped out like immediately. But when you came back into this level right here, it was a great time for longer term swings. You came back into your key level. This key level has been here for really a long time. Okay, you got the break above, you came back and retested. It's a 174.6. You held and you pushed back into like 178, 179. I think AMD is still really good. I think they're going to continue to get momentum. That's why you're still seeing price targets being raised on the stock. I do like them a lot. I think you could easily break it back above highs and start pushing towards 200. It sounds crazy, but again, I do believe it. Netflix, really interesting name here. I'm keeping a very close eye on it. I'm starting to lose a little bit of faith on it. Yeah. So your key levels right here, 562.2. You're just grinding on top of it. You can't make a higher high. That's what's scaring me here. You have to have really tight stops. But if it ever makes a higher high, can break above 570 again, I think you're pushing into highs. We know 580 is a really big level, so that's one thing that I will, keep into account. If you ever break below like 545, 540, you have a lot of room to the downside. But again, right now, I still looking for the upside as long as you're holding the 562 level, but I'm not getting crazy. NVIDIA, this was kind of incredible. You ended up holding the day at 660. There is a lot of puts or calls that are in the money. You also have this really nice ascending triangle that broke out earlier around 653. That was nice too. Pointed that out in Discord if you're paying attention in options chat. But right now, dude, this is crazy. Again, this is why NVIDIA can run the way it's running, because the amount of contracts that are getting in the money in the options chain, and they remain there and they continue to roll over, and then you get the gamma that pushes these stocks to continue to the upside. Again, NVIDIA is a beast. I would not be shocked or surprised if this ran to 700 quick with any type of continuation from the Nasdaq. It's absolutely resilient. The way that you mounted and held above 600 was crazy. That's why I said earlier this week, I said if you're above 600, you can't go short. It's the stupidest trade that you could ever do. So today, congratulations if you traded that. Really nice to the upside. Amazon, I actually kind of like it. I'm not going to lie. So you're above the key level of basically 171, and you're just trending there. You're kind of basing up here. I like it a lot. If you get below 171, 170.9, I'd probably cut this, but I think this has room into 177, 176. Extremely strong. The earnings were beautiful. They were fantastic. They have a lot of room to run. One thing I kind of skipped over a little bit here too, but I want to highlight this before we go any further, okay? giving you a visual price. This is Edgeful. You can check them out. The link is down below. But again, earnings performance on some of these names, specifically AMD. This is the one that has me like the most excited. If you look at the past year of data, if you look from earnings, the best move you've gotten is like, it's pretty minimal. You don't really get that much. Like, it's just not a lot, right? Your average move is 2% from earnings. But if you fast forward 10 days after to 15 days after, you're getting almost a 13 to 14% move after those earnings hit. Okay, so take that into account. A lot of these stocks are getting some of their best move post earnings. Okay, Microsoft, look in here, right? I'm not, again, bulk of your move coming after those earnings. Okay, as you can see, within 15 days, you're getting over 2% there. Okay, that's the visual that I'm liking and what I'm watching, right? Let's go to Amazon. Again, a 5% bulk of your move is after those earnings, right? That's the important part here, guys, is that after the earnings is when you're getting most of these continuation moves. And what do we know? That the earnings just happened. Now, I'm not saying you have to explode, you have to go to the moon or YOLO all your money into it. That's not what I'm saying. But I'm just saying the statistics and the data prove that there's something to this. Now, also, too, why were we so confident in today with the upside? Again, what do we know? Fridays, go to SPY. What's happened here? We look at SPY. It's one of our best days for closing green statistically. We also look at what's happening with the high and close on the weekday. Typically, our peak on the week comes on a Friday. 19 of the 52 weeks from the past year have ended the highest on the week, right? And this also usually leads to continuation on Mondays when we close at a peak. Worth mentioning. Also, again, we go to green to red days by weekday. 76% of Mondays are green. Statistics are on the side of the bulls here, okay? These are all things to be considering. I also want to cover, again, we go to the gap fills. If you look at Mondays specifically, anytime we gap down on a Monday, 91% of Monday's gap downs, right? Meaning if we gap down here, let's go to SPY for instance. So if SPY, let's say it gaps down at like 492, there's a 91% chance just based on the last year's data that you're going to fill the gap back into 494, right? So I'm not saying to hammer, I'm just showing you the stats, right? These are just the numbers. Go do the data for yourself. Shout out to Edgeful. We really love these guys. Shout out to Andre and the team. They're killing it over there. Really got something special. They have a 7-day free trial down below. But that's what I'm looking at here on the market. Nothing crazy, but I'm definitely very, very excited. I also do want to say honorable mention to any and all the cloud names out there right now. CrowdStrike, again, you're mounting, you want to continue to push. CRM, you're back above 284, you're mounting, and you're going to try to get that push, in my opinion, into 300. Snow, you're going crazy now. You're breaking out. Datadog, these are all names we were talking about for a long time, right? You mounted 124, you're at 134. This is probably like around my actual target, so be careful. When you get above this level, you could get pretty spicy to the upside. Again, these are my favorite names. This is what I'm watching. If you have questions, comment down below. Just come on, don't be biased, please.